Way back in 1999, Ratan Tata and his team flew to the US to sell their failing car business. They went to meet Bill Ford, who was the chairman of the Ford organization, and there he said, "You do not know anything. Why did you start the passenger car division at all? We are doing you a big favor by buying your car division." The same night itself, Tata took a flight back to Mumbai, making sure that no further discussions happened between Tata Motors and the Ford Group. And then he set out to give massive focus to Tata Motors, making it one of the largest car manufacturers in India by the year 2008. But by this year, the story in the US had changed. Ford was struggling to make profits and they wanted to sell their Jaguar Land Rover Division. And who did they approach? They approached Ratan Tata. And while completing the sale, the same Bill Ford said that, "You are doing us a huge favor by buying Jaguar Land Rover. Thank you." Yes, this is the story of Tata Motors, the brand which is pioneering EV production in India, the third largest car manufacturer in the country and owner of the prestigious Jaguar Land Rover Group. So in this video, let us look at the company which pioneered car production in India, what their businesses are and what their future might hold for them. This is Ajay Ajith. Welcome to Market Feed. So to understand more about the company or the stock that is Tata Motors, let us first quickly look into the history of the company. It started off in 1945 as Telco. It was a brand or a company which manufactured locomotives for India. And from there it collaborated with Mercedes Daimler to start manufacturing of heavy duty trucks in the country. The passenger vehicle segment of the company was not launched until 1988 and only by 1998 is when it launched its first indigenous car made in India. It was none other than the Tata Indica car. And in the next many years, they continued to work with and acquire many foreign companies, including Jaguar Land Rover in 2008, which helped them grow their business to another level. And in 2010, they had a market share of 13.7% in the Indian automotive space. But by 2015, the entire scenario had changed. Tata's market share in India fell to just 4.6% by 2015. In the matter of 5 years, look how far they went. But again, the brand did not let down. By 2016, they launched what is said to be their turnaround car, the Tiago. And by 2017, they launched the Nexon as well, which has proved to be one of their best-selling models ever. Their safety-first strategy changed the entire narrative of the Indian automotive space, and now we equate Tata cars with safe cars. And back to 2023, their market share is back to 14% and they're closely competing with Hyundai to get the spot of the second largest car manufacturer in India, just behind Maruti Suzuki. But wait, this is where our video takes a U-turn. Did you know that Tata Motors passenger vehicle division, which everyone talks about, it's a Nexon, EVs, a Tiago, every car, did you know that it contributes only 13.8% of the group's insane revenue of 3.5 lakh crores? Yes, just 13.8%. And the EV segment just contributes less than 1% of the company's entire annual revenue. This is where you as an investor have to listen to Charlie Munger, who is Warren Buffett's right-hand man. Invest in companies that you understand. And yes, I'm going to go ahead and say it. Most retail investors of the company do not understand the brand at all. Because as I said, even though the name of the company is Tata Motors, this Tata Motors, the brand that you see every day, it just contributes a small portion of its revenue. So what exactly is Tata Motors' real business? This is where we go back to that 2008 deal. Jaguar Land Rover, forming 64.4% of the entire annual revenue of the company. This is the most important piece of the puzzle. Jaguar Land Rover alone brought in a crazy 2.25 lakh crore of revenue last year for the company, which is double that of Maruti Suzuki. It is more than that of the combined revenue of Infosys and TCS combined, which are two of the largest companies in India. But the crown jewel of Tata Motors is the reason why it is making huge losses. Just in the last 5 years, Tata Motors has made a combined loss of 45,000 crores. And out of this, Jaguar Land Rover has contributed to losses of 52,000 crores. That means the other businesses were slightly profitable in the last 5 years, but Jaguar Land Rover pulled back the company to loss-making situation. But how did things get here? Was JLR always a major problem for Tata Motors? Never. Back in 2008 when it was acquired, it was a very struggling company, and that is why Ford decided to sell it to Tata. But from there to 2016, the company tripled their sales. Both Jaguar and Land Rover, they were selling their highest ever number of cars back in 2016. And if you look at the sales revenue chart here of Jaguar Land Rover, you can clearly see the dip coming after the 2016 year. So the problems of the company kept on adding up. Back in 2016, when Trump became the US president, the US-China relationship started to go down very badly. And China was one of the largest, if not the largest, markets for Jaguar Land Rover. And after that, Brexit came in, which meant the company had to make a lot of restructuring. They burned a lot of cash and sales started going down again. The lack of innovation from Jaguar with no SUV models launched since 2018 has not helped at all. In fact, Jaguar is a failing company for Tata Motors, and it shows the questionable decisions by the management on why there are no new models coming up, why they are not at least trying to sell the company to whoever might be interested in investing more in the company. They are still not giving any focus to the brand. Meanwhile, Land Rover is becoming a sensation across the world, and buyers are loving the SUV box-like SUV designs, and they're falling in love with the latest Land Rover Defender model as well. But even in the positives, Land Rover is struggling to sell cars because of semiconductor issues. Even in March of 2023, they had an order book of nearly 2 lakh cars, which comprised mostly of high-end luxury cars. If they were able to sell it, they would have made huge profits. But just the fact that they're not able to get the semiconductors, and because of this, they're not able to sell these cars. It's even worse than any other international brand. So let's get on to the pros and cons of investing in Tata Motors in this current date. Let's start with the cons here and then move on to the pros, which might give us some confidence for the future. So the first obvious con or the disadvantage is it is a very tough company to analyze and understand. As I said earlier, I am sure no retail participant, or at least a very small retail participant group, is who understand the brand properly. Because of its huge international operations, its commercial vehicles business, its JLR business, it's a very complex brand to analyze. Even if you go through the annual report, it's a lot of different businesses and verticals that you will have to properly understand, give weightage according to their brand value, and then calculate a possible valuation for the brand. And the second disadvantage is Jaguar is failing. It is costing billions of pounds to the company, and the bad management equation comes back into question. What are they even doing with the Jaguar brand? 3. Over-dependency on China. China is a huge market for the brand, and the recent economic slowdowns might actually hit sales and bring down the revenue numbers of the company. And 4, which is the most important one in my opinion, it lacks a deep pocket like its competitors like Volkswagen, BMW, Audi, and even Mercedes, who are investing hundreds of billions of dollars into EV production and their development. And JLR is just not able to keep pace. Land Rover has not even launched one single fully electric model, even when Tata Nexon here is selling it like hotcakes. Now that the disadvantages of investing is done, let's look at what could be the positives, the advantages of investing in Tata Motors as a company. Land Rover has the potential to become a huge cash cow. It has immense upside possibility, which if done well, if executed well by the management, it will become a huge profit-making machine for the Tata Motors group. And the second advantage is the Indian unit returning to profitability. Even though it contributes just a small percentage of overall net profit, it is still a good to have Indian brand promoting a lot of sales in the country. And the third advantage, Tata Motors is an early mover in the Indian EV space. Even though they're not generating huge revenues or huge profits, their EV arm is being valued at nearly $9 billion. They even got a $1 billion investment into the company last year. And this will push up the valuations of the group as well. And overall, if you're looking at it, if Tata Group is able to pioneer this EV segment in India, and they're able to transfer some of this knowledge to the Jaguar Land Rover group, who, if they sell one single car, they have immense profits. Think about what if they can transfer this knowledge, this technology to the English brand as well. They can be an immensely profitable company. So let's come into the last segment, which is my thoughts on investing in this Tata Motors stock. The conclusion that I came into after reading the annual report is that Land Rover needs to be milked more. Jaguar needs to be revitalized or sold off so that the brand can focus on the Land Rover group. With more than 2 lakh orders in the pipeline, if they're able to solve the semiconductor issues, they can generate huge amount of sales in the coming 2 years and will turn into an immensely profitable company in the Indian market. And one thing that I would like to tell you, if you're someone investing in Tata Motors just for the EV boom which is happening in India, please do not. You could have so many other stocks. In fact, you can look at some peer Tata Group stocks like Tata Chemicals, who is directly involved in EV battery manufacturing, where if you invest, you can get all these EV benefits, right? But if you're investing in Tata Motors, please do understand that you are investing in just another company which is known as Jaguar Land Rover. So that's it, guys. Make sure you hit the like button and subscribe to the channel if you like this video, and make sure that you watch the previous video, which is why Maruti is still ruling the Indian markets. See you again. Bye bye.